So hello traders and welcome to another video review. Today is Monday, July 17th, 2023. Let's find out what's going on the Forex calendar today. What do we see here is plenty of important data from China. Those data were released overnight, so let's just dig in and see what is going on here. GDP of China for the second quarter disappoints the market participants because they expected 7.3% while the actual reading was 6.3%, which is still better than the last reading of 4.5%. The overall GDP is 0.8%, and year to date is 5.5%. Fixed asset investment beats the expectations of 3.5% with the actual reading of 3.8%, but actually it's a kind of a little bit lower than 4%. Industrial production beats the expectations and the last reading with the number of 4.4%, and the year-to-date industrial production is at the level of 3.8%. Unemployment rate is on the steady level of 5.2%. So that's the data from China, overnight data. So what do we have else here on the Monday? There is a ECB President Lagarde speech. There is ECB Lane speech. Both of the speeches are scheduled for release at 10:15 and 10:30. Then during the London session we got some New York Empire State Manufacturing Index data from the US, and then data from the Canada in form of the Virgin Securities purchases and the wholesale sales scheduled for release at 2:30. So this is how it looks like on the economic calendar. Plenty of the data from China. So definitely what we are gonna do right now is to take a look at the Australian dollar and the gold to see how did they react on this data. So let me just switch. Before we switch to the Australian dollar, let me just briefly show you the weekly chart of the British pound. I'm showing you this because as you can see here, we got the 61% of the Fibonacci retracement of this whole big movement towards the parity on the British pound that was made on the last year, September last year, the end of the September last year. And then of course we got this very nice rebound higher. Now we already broke above the 61% of the Fibonacci retracement, right? And this weekly candle closed way above this retracement level. What it means? It means that all of these retracements are now unnecessary on any of the charts, 38, 50 and 61% at least, and we are heading towards this technical level. This is the technical resistance. Let me just show you this one briefly. There you go. As you can see, we are now about to test it. 1.31 and 60, that's the level of the technical resistance. Those are the lows from the December 6, 2021. So the pound might be the most expensive from since the 2021, so please keep an eye on this level because as you can see, there was a nice bounce that lasted 4 weeks when the market hits this level. So it looks like an important level for the market participants. If there is a breakout higher, then of course we will see this on the chart, and then we will confirm this movement to the upside is not the correction. It is another trend forming on the British pound. What is peculiar with this situation is the RSI on the weekly, which hits the extremely overbought conditions. So right now the price above 1.3 on the British pound versus the US dollar is really expensive, even from the weekly point of view, weekly time frame point of view, of course. So please stay focused and keep in mind this level 1.3160 is a key level for now. So right now we should be seeing what is the current plan of the market for this level, how they can manage, and how this level will be played out. It all depends market participants. Okay, now let's just jump to the Australian dollar now. Of course, we start from the weekly, but there is nothing to talk about because the weekly is still closed below the 50 and above the 100 periods moving average. So let's just take a look straight on what is going on the shorter time frame, like 4 hours. Of course, completely different perspective must be made here. We got this technical resistance 6,902, very nicely putting a lid on the rally on the Australian dollar, so there is no breakout. Moreover, we got very strong movement to the downside towards the 50 periods moving average from the extremely overbought market conditions. So right now we are just roughly above the level of 53 points is the actual number of the RSE. Also, what do we want to see now is some sort of the either reaction, counter reaction, or a test of the technical support, which is located at 6,708. So that's the next target for the bears if they want to push this market even way lower. So this is it. That's the current situation. This is the technical support. Maybe I will make it. This is the intraday technical support, and maybe I will make this this level even more visible for you guys, so you can see this technical support. Very nice and technical support, very strong technical support, tested many times. So please expect this market to move towards that support because it looks like this push to the downside is solid. And last but not least, let's take a look at the gold to see how it reacted on the Chinese data, and it looks like there is almost no reaction to the data. So it wasn't actually something that moved the prices of the gold to 1,963 is the local high, and the gold is locked in between the level of 1,950 1,963. Of course, we are still trading below the technical resistance. Let me just swipe down my chart so I can move it a little bit lower. There you go. We have this technical resistance. One of them is there's a series of the technical resistance. There's plenty of it because the bulls tried many times to break above 1,972, 1,982. Okay, so plenty of the even lower. You can find some sort of the levels lower than 1,972. For example, 1,969. So this is very important zone for the bears. They will defend it. They will definitely be trying to terminate the rally on the gold, and due to the extremely overbought market conditions on gold, now we are coming off these levels. Of course, 59 points is the latest RSI on the 4-hour chart, but there is still a room to go lower. There is still a room to go towards the technical support located around the 1,936. That's still a valid technical support, and we got, of course, a little more for you, 1,934. 34 is the technical support for the bulls. So if we extend the pullback towards this level, nothing extreme. That's nothing new for this market of gold. That's nothing new for the financial markets. That will be just some sort of the nice pullback, nice correction on this market after this very successful, to be honest, rally. Let me just take a look at one range here, percentage range, because we rallied at 3.75%. So that's not too bad since the low of the 29th of June this year. So we can of course do this some kind of a pullback, and then possibly try again to test this supply zone, this technical resistances, horizontal technical resistances located between 1,969 1,982 in the nearest future. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.